my personal favorite trading systems. This system I like to call the trend explosion system, and basically it looks for absolutely intense currency movements. Movements that, in our opinion, oftentimes continue in that direction. And one of the ways I find these trends is by using our Trend Intensity Pro. Anytime you see a move that comes to our 20 level here or above, it's very likely to continue. And there's only two different ways that we get into these trades. If the market moves sideways for 30 minutes, an hour and a half, and then breaks up or down, we get in. Or what I prefer, a pullback trade. So right here at 7:30, we have absolutely extremely weak CAD and strong yen, which is causing the CAD yen to fall. And then we get a little pullback right here. This is probably a 38 to 50% Fibonacci level. It went right to the 50% level, so that's a added high probability. And there's two different ways of getting into this. As it pulls back and goes sideways and breaks down, you get short. Or as our IntelliTrend bars shift red, you go short. Drawing the trend lines underneath the bar's lows, you might also go short once the trend line gets broken with your stop right above the bar's high. Now, oftentimes currencies do not go past our lower or upper containment bands, this white line right here. When the market is this weak, you can get moves past that. So we also use our trading zones, which are very high probability support resistance areas that are outside of the normal range for the day, and therefore more likely to have buy orders placed. And you can see it shot through our first one, hit our second trading zone, predicted low, and the market stalled. Now, I typically rarely ever get short when the market is underneath the lower containment band, because these are based on the last 20 days maximum volatility, and typically markets hit these levels, stall, and then reverse violently the other way. So when they go below this level, it's like a spring that's overwound. It's more likely to go the other way. So wait for, you can see again right here, extreme weakness. Wait for a little bit of a pullback, and you might have gone short right here with your stop above the bar's high right here. And the market pulled back a little bit. You had pretty decent strength on the way up here, so it's less likely to come down. And when it comes down a little bit, you move your stop in half and a break even, and you get stopped out. And sometimes you have to get right back into the trade. You know, maybe right here you can see the bars turn red a couple minutes, 15 minutes before that, and the market starts to go down again. This is about a 10 or 15 pip move down. The first one was we would have been short somewhere around 79.60 and out somewhere around 79 for a 60 pip drop in about 50 minutes. The second trade we lose break even or lose 5 or 6 pips, and the third trade we make 10 or 15 pips. Or if you had held on when it went down below the lower containment band again and the market was no longer weak, as you can see, double bottomed right here with almost no weakness, very likely to reverse, and it did. Let's look at some other examples of this. Dollar CAD, extreme strength right here. And it also goes through one of our Fibonacci levels that we manually draw on longer term charts. So anytime a fib level is broken, usually fib levels get hit and the market reverses. Anytime they're broken, that is one heck of a strong sign of strength. So you get a little pullback trade right here, you go long, and this just exploded up past two other fib profit targets and eventually stalls out right here. Now, I would never want to buy this far above the upper containment band. So even if you see extreme strength and it's more than 10 or 20 pips above the upper band, you can't buy that pullback. Plus, this particular currency has been up 3 days in a row before today. One of our counter trend systems is to look for shorts in any currency that's been up 3 days in a row straight. And typically we look for shorts at or above our upper containment band and or at Fibonacci profit target levels above there. But we don't get into counter trend trades until the momentum stalls. So we draw our trend lines underneath the bar's lows, and once the market kind of stalls and goes sideways and starts to pull back, then we might consider a counter trend trade. Now, I don't think I personally would take a counter trend trade in one of the strongest up moves of today. However, our counter trend system did work, and it did pull back about 50 pips. But be careful selling some of the stronger pairs like this. Let's look at some other examples. Here's a euro dollar, and right here at 7:30 to 8 o'clock we had extreme weakness. Now, typically you want to find a pullback up, but the market didn't pull back in this case. It went sideways for 30 minutes to an hour, and like I said before, one of our entry methods is once the market does go sideways for 30 to 60 minutes or more, the longer the better. If it goes sideways for 3 or 4 hours, it's a higher odds trade than if it only goes sideways an hour like this. And if this market does not have any strength enough to pull back, then it's very likely to continue down, especially after an extreme momentum play like this. And so you draw your fibs on this, and when it breaks down right here, you go short, and the Fibonacci profit target level and our trading zones are a great place to get out of the trade. Now you also have extreme weakness here, but the market's underneath the lower containment band, and therefore, like I said before, it's more risky trade. It comes down a little bit. If you had shorted there, you had a chance to make a little bit. Once the market pulls back again and it's not able to go higher, you might give this a shot. This is a pretty low probability trade, but in this instance it worked. You draw your fibs on there, and again, the Fibonacci profit targets down there are excellent places to get out of the trade. Even this trade right here, we might have been short around 38.25 and out at 37, pretty much 37.25 for a 100 pip move on the second trade. Let's look at some other examples. Australian dollar. Here we have extreme strength. So anytime the market goes sideways, you want to buy the breakout. And you can see in this case the market shot up, hit the hourly moving average, which is frequently a resistance area when the price is underneath it, and there's likely to be some selling there, which there was. And so this is an example of a trade that didn't work. Our stop would have been underneath the bar's low right here. And once it goes up and kind of goes sideways and you see it's not able to go higher and the statistical strength all but disappears, you might have tried to get out of this trade near break even. Here we had somewhat decent weakness on the way down, not too much, but again it wasn't able to get above the hourly here, and you might have decided to go short for that reason. But as of right here, we have just off the charts weakness, and there's really no pullback to speak of, and it's underneath the lower containment band. So this is one of those trades that, even though it worked, I personally probably would not have taken the trade. You know, it did go sideways here for about an hour. If you shorted here with your stop above here and hung on for about an hour, it did make another move down, and you can see the Fibonacci profit target levels are pretty good areas to look to exit. But when it's this far underneath the lower containment band, it's a much riskier trade. There are much better trades to take, like the CAD yen. This one was extremely weak, rallied back up. It's not even close to the lower containment bands, which make great profit targets, and sometimes on super weak days like this the market shoots through them. But if you short down here, there's less room usually on most days for it to go, and getting short at or above the lower containment band is a much better bet. Here's a New Zealand dollar, and you can see right here extreme weakness, and so you wait for a pullback. It breaks the trend line, and here's another example of a trade that didn't work initially. You know, your stop was above there, it went a little bit your way, then came right back and stopped you out with maybe a 10 pip max loss. Came back up to the hourly, which oftentimes is a resistance area, as you can see here and here. The market was half as strong as it was week before, and so as soon as it comes back down, the bars go red. If you want to be safe or safer, you go short, and that led to about a 20 pip move, and you might have shorted this next move up also because there was very little strength compared to the previous weaknesses, and that trend continued. Here's a good example of off the charts extreme weakness again right here, and the market went sideways for an hour. It's really close to the lower containment band, so you might decide to take this trade, and when it breaks down there you go short, you draw your Fibonacci profit targets off of this, and you get out either at the first or second fib target. And here's our projected Fibonacci level, which when it's this far underneath the lower containment band usually is the low of the day, which in today you can see it was. Great place to get out of the trade. We would have been short here around 88, out at 40. So that's about a 45 pip trade. Now again, extreme weakness here. It comes back up near the lower containment band. You might have decided to short here. If you did, you might have made a few pips or broke even. It did pull back about 25 pips. Once the market keeps going down, it hits the support level, becomes more risky to sell, so I wouldn't short that. But again, when you have extreme weakness and it's right at or above the lower containment band, then you can consider taking those trades. Here's the Australian yen. Hit a fib level and broke it. Extreme weakness. It's right at and above the lower containment band, and when it goes down here, you go short, you draw your Fibonacci profit target levels on here, and usually somewhere between a 1.382 and 1.6 fib target. You can see it touched this level to the pip and reversed, held on at this first level here as well. Great place to get out. Now you also had extreme weakness here, but the market's way underneath the lower containment band. So it's usually a lot riskier to short down here. If you shorted here, it did go down a little bit. If you waited a little bit longer to see if the market exploded up, which it oftentimes does, if it can't get above that level, then you might decide to give it a short right here. Notice it's right at the lower containment band here, whereas it was not here. Draw your fibs again, and usually the market stalls at one of these fib targets. So unless it explodes through it like this, when it goes past the 1.618, that's an excessive move, and if it starts going sideways like this, just get out of your trade. So that last instance, you were short around 57, out around 86 down there for a nice little 70 pip move. Let's look at the New Zealand yen. Extreme weakness here, it's very close to the 20 level. You can decide on a case-by-case basis whether to take these trades. You get a pullback here, you go short, you might have got stopped out with a loss, came down and went sideways and broke down again here, pull back a little bit, maybe you broke even or lost 5 pips on there. So you might have had 2 losses here before the third one finally worked. Again, extreme weakness typically leads to a continuation, and when currencies are weak, they typically will go down and stall out at the fib target down here, and you're out. And again, later in the day, we have off the charts weakness, but it's also underneath a lower containment band, so it's usually not a good idea to sell underneath the lower band, or if currencies are strong, to buy above the upper band. Let's look at the dollar yen. Again, you see extreme strength here. The market is above the upper containment band, hits one of our trading zones, likely statistical highs, pulls back, goes sideways and breaks out. You might have bought right here. This one only went up 10 pips, hit that double topped right here with half as much strength, and you're out with a quick little 10 pip move. Again, these trades don't always lead to huge moves, and oftentimes you'll have a loss, sometimes 2 and sometimes 3 before the move continues. But anytime you see extreme strength or weakness of 20 or higher on our Trend Intensity Pro, those trends oftentimes continue, and it makes a great trading